right, guys. Final video in this particular section is the key players in the property industry. Now, it's a complex industry, and a lot of the time you're going to need financial advisors, professional advisors, just to assist you, legal advisors. And I'm going to go through now just the more important advisors, just to be aware of them, okay? And their role and what they do and how they can help you. First, let's talk about real estate agents, okay? Often referred to as brokers. Agents work for the buyer of a property, and they also work for the seller of a property. And typically what an agent will do is they will list the property on their website, on their marketing materials, in their shop window. And if you're looking for a property, you know to look at that shop window, you know to look at that website. If you're selling the property, you know to give it to those people to put in there. They basically bring the two parties, the buyer and the seller, together, and they'll often negotiate the deal on your behalf. You pay them a fee. Usually here in this market, it's like 1.5% or something like that. In other markets, it can be a lot higher. I know in America, when I bought in America, I had to pay 6 or 6.7% in New York. That was the agent's fee. So it can be quite substantial. They'll also help you find a property if you're looking to buy. So you can appoint an agent to work on your behalf to go out looking for property. They can also help you find tenants. So if you buy a property as to rent out, you can give it to an agent and they will find tenants for you. Now, the buyer and the seller is obviously the person that is employing the agent. The buyer and the seller is the principal in the deal. They are the most important people. An agent can't survive without buyers and sellers. And so what we all hope to be as property investors, we hope to be the buyer, and perhaps at some point in the future, we will be the seller. But you'll always be one or the other. And as a homeowner, you're obviously a buyer and a seller as well. You're also, if you have a desire just to be a property investor. Now, there can also be institutions can buy, businesses can buy, trusts and charities can buy and stuff like that. So there's different types of buyers and sellers, but typically every property transaction will have a buyer and a seller. Solicitors, also known as lawyers if you're in the US, this is your legal representative, and they will steer you through the process of buying the property. They'll also explain it to you how it works if you're doing it for the very first time. So if you're sitting down with a bank and you're asking like, how much can I borrow? They're going to expect that you have a solicitor working for you in order to kind of do the transaction and stuff. And the solicitor is going to have to do certain things for the bank to give them comfort that they have a mortgage secured on the property. These are absolutely essential advisors. I would not suggest anybody attempt to buy a property without a solicitor acting for you. They do your legal due diligence. I talked about due diligence in another video, but that is to make sure that the person selling you the property actually owns it and has proper title to sell it to you. It is possible that title can be flawed, and it will mean that a bank will often walk away from, they will not finance a deal with a flawed title. So this is very important. I would say that the solicitor is probably your most important advisor in this transaction that you're going to be doing. They'll also work with your mortgage provider and things like that. Talking about mortgage provider, let's get into lenders. So the lender is the person that is going to be, or the institution or the entity that is going to be providing finance for you to purchase your property. Without a lender, there is no market, because pretty much every property is priced in such a way that it's very, very hard to pay for it with cash. Typically speaking, everybody who's buying a property will use a portion of their own money, or maybe as all of their own money as a portion of the purchase price, and then they'll borrow the rest. That is very, very traditional, very typical. Usually these lenders are banks or credit unions, but they can also be private lenders. They can be these new, what we call niche lenders. And those are companies that have been set up with the view to kind of lend to the market. We're also seeing peer-to-peer lending platforms now become a thing. And that is a little bit like we talked about earlier, crowdfunding. Peer-to-peer lending is the same kind of platform, and it is where people who have money to invest will give money to this platform, and they will give that money out to other people who need it to go and do a deal or develop a property or buy or something. So those are another type of lender that's out there. Now, how do you deal with these lenders? You can either go and make direct contact with the lender, or you can use what is known as a mortgage broker. And the mortgage broker is a person who will help you get a mortgage. They help you apply, and they'll know lots of different lenders. So they can often be a good, useful way to bypass having to knock on 20 different banks. You go to one broker and he'll be the one who's dealing with all of these other people. And they'll work with multiple lenders. A lot of the time their fees are paid by the lenders, so you don't have to pay them anything. And they will help you avoid disappointment a lot of the time, because they'll know whether or not you're likely to get financed or not. Or they'll also know the banks that have the more, the better rates at the moment, or that are more likely to lend to this type of risk. So they are definitely good people to reach out and contact. Now, there's also an advisor called a valuer, or also referred to sometimes as appraisers. And these are professional people that are paid by the banks a lot of the time to value a property. Now, usually what actually happens is you pay the fee on behalf of the bank, and that is the way these guys will often be charged. But banks tend not to lend any money unless they have a professional valuation of the property. So you might go out there and you might buy something for 120,000, or you might agree to buy it for 120. The bank will want to be reassured that that's what it's worth. So they'll go and they'll appoint a valuer to go see the property and put a value on it. And he might come back and say it's worth 130. The bank will be very comfortable then lending for the 120. But he could come back and say it's only worth 100. And so that will create a problem for you. And this is one of the reasons why it's important to try to get to know a valuer. You may not be able to use that valuer with your bank, but they'll be able to steer you on values and things like that. It is important to establish the value of your property so that you can actually know whether or not you can refinance it or not. There's also surveyors and inspectors, and these are guys that are also professionals, but rather than valuing the property, they will do inspections of aspects of the property. So for example, you could bring in a civil engineer to check the structural integrity of your building, and they will carry out what's known as a structural survey. You can also bring in somebody to do a condition report, and so they'll go in and they'll look at the electrical, the plumbing, they'll look for possible health risks like asbestos or mold or any of these things. It's always a good idea to get these guys involved if you're going to go ahead and purchase a property. And often the bank will insist on it anyway. But if you're standing at the back of a building and you're looking and saying, I'd like to buy this house, and you see a big crack running down, that could be a major problem. And so it's important to bring in a structural engineer to do a report on that crack that you see. Always, this is another form of due diligence. So you have to be very, very wary not to spend money on a property without spending a little bit on the inspections associated. Property manager is the next thing I'm going to talk about. Now, professional managers, they take care of things on a day-to-day basis for you. You can, as a property investor, buy a property, start collecting a rent, and have no day-to-day involvement. The rent just goes into your bank. And that's if you employ a property manager. Property managers, they charge a fee, and typically what they'll do is they'll collect the rent and they'll take their fee from the rent and they'll pass you the rest of the rent. And for most people, it's a very good deal because it allows you to step back from the kind of the day-to-day hassle, and they will have people employed that are doing this all the time, so they'll understand how to deal with problems and stuff. They'll also vet your tenant. If your property is available to rent, they will vet the property and they will make sure that the tenant you're bringing in or that they're going to put in can pay the rent. They'll do the background checks on them. They'll do all of that. They are they are very useful for passive investors. For people who are more active, and if you're looking at HMOs and stuff, you'll have to see whether managers are actually interested in that kind of thing. Contractor. Okay, we talked about development and we talked about, refurbishing. Sometimes, depending on the size and the scale of a refurbishment job, you may find that you have got to bring in a contractor. And a contractor is effectively a builder, also known as, but they come in and they'll do all of the construction work. They'll take responsibility for the quality of the construction work. Now, on that, it is important that you check their previous jobs, make sure clients that they've worked with are satisfied and pleased, and it's always good to have a chat with those clients. It's very important that you have good insurance if you bring in a contractor. The contractor will have what's known as all risks insurance to cover your property, but it's just important to make sure you work with good professional builders and contractors. Design team professional is the next thing. Now, if you're going to go and look at refurbishing a property, and let's say it's more than just painting and stuff. Let's say you decide you want to extend and build bedrooms out the back or something, whatever it might be. A lot of the time you're going to need design team professionals to help you. And then what I mean by that is architect, engineer. There can be a services engineer. There can be people that just will help you get planning permission and will advise you on if you want to knock down a wall. They'll advise you whether or not that wall is structural. And it's important to do this kind of work. Again, due diligence. If you rush into a deal without doing this kind of thing, you can find that there are very significant costs if you're not careful. And engineers, they often work with an architect. They'll do structural work. There's also a thing called a quantity surveyor, and they are employed to control costs on the property. So if you're hiring a contractor, the contractor might say that the job is going to cost 120,000. Your quantity surveyor will analyze that and will check and make sure. And a lot of the time, the banks will insist that a quantity surveyor ensures that the money that's being drawn down goes into these particular development works or construction works. There's also planning consultants. There's a lot of different consultants, and I'm not going to dwell on that any longer here. Developers, those guys, you're looking at one here. We buy land, we build houses on it, we build buildings on it, and that's what we do. Some of you may wish to become developers. Others may just want to remain an investor and be quite passive. There's no right answer. It's just, what are you best or most suited to? But developers tend to be people that have an ability to tolerate more risk than others, because you're going to be borrowing sums of money and you're not always certain of the outcome. And so you do have to have a certain risk tolerance to be a developer. So guys, I've covered what I consider to be the basics. This is section 1 of module 1, just the basics. But I hope you found this useful. If you do have any questions that have caught, from this, please bring them to the next huddle, and I will see you in the next section. Take care.